Good day, everyone. Yeah, so now we actually want to talk about the structure in the market structure. So, like you all know, the first part of it that you actually know what forex is actually. So the next thing is what going into the structure. So we have three types of structures. So now the three types of structures are: the first one is the uptrend. When something is going up is called what? Uptrend. When it's going up, it's called uptrend. And when it's coming down, it's called downtrend. Right? So, and this is the third one. When it's actually moving sideways, it's called ranging markets. So it is not trending. We have two types of trend, the uptrend, downtrend, and the third one that the market is not actually moving, but it's just moving sideways. That's the what? Ranging market. So now, how can we actually know if the market is going uptrend or downtrend? First of all, let's just talk about the uptrend first. Now, in an uptrend, how can we classify it as an uptrend? Right? The first instant there is this place. Everybody, look at this plan, this place, like that. You can see that when it moves like this, it came down and break this place. That is to say, it is going uptrend. So it comes down again. People call this coming down a correction. They call it correction. Market is correcting itself. And when the market breaks this highest high now, is what market is still trending up. When it breaks this place, it's still trending up, comes down again, and even comes to this place. But as long as this place is the last high there. So now, what do we call all these highs? What do we call them in the forex market? We actually call them the what? The higher high, the higher low. Right? This one too is higher high. That is to say, that's the highest place there. This is the highest place there. This is the higher low. Because the market is going high, it's trending up. So we are calling it higher low. So we have to note that thing. That it's very, 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 very important. So this one as well is what's higher high, higher low, right? So like that and like that. So now it's like this, right? So we have what's here again. We have the higher high, we have the higher low. This place is the last place, higher high, right? That's the term we use for an uptrending market. Now, this is what? This is for the downtrend, something that is going down. Well, if you notice this one now, you can see that it is breaking. It's breaking this place. That is why we are calling it higher, and like the market is still trending up. If it's breaking this place, it's still trending up. If it's breaking that place, it's still trending up. But if it doesn't break that place again and it change, we are actually getting there. But let us speak about this now. Now this is the downtrend. Something that is going down. Obviously, you can see that it is going down. It's going down. So now, how do we mark this downtrend of the thing? First and foremost, so actually marking it, this high place, this place, it is what? Lower high. This low is lower low. You understand? Because it broke this place. Can you see? So this place too is what? Lower high, lower low. Can you see that when this place broke this place, and that is when we have the lower high. That is when we have the lower high. It breaks this place like this. It's stopped here and went up like that. So we have the lower low like that. When this one comes down like this and breaks this place, can you see? And break this place. That's what that is to say is confirming that we've gotten the higher, the lower high, right? So always note it like that. So this one too is going up like this, right? Going up like this. We have the lower low. And this one breaking this lower low place gives us the confirmation of the lower high. If this one did not break this last low, we cannot label it lower high because it is still trending, it is still doing its paparazzi. But when it breaks this place like this, when it breaks that place, so it's giving us a confirmation of a lower high there. Now let us take a look at this also. So it giving us a break here and going back. Now it's giving us the direction that this place will become a lower low, and it reached here and do what? Broke this place. After breaking that place, it's giving us a what? Lower high. So after giving us lower high, you can see that the market is what? This is the uptrend for the higher high, higher low. Breaks the higher high there. It gives us another new higher high. This one breaking this higher high here is giving us a new higher high here. So it's correction, the last point of the correction is what we call the higher low. You understand? So when it breaks the last higher high, there is giving us another higher high. That is the way market here soon síwájú. The market is moving forward. So if that market is moving forward, it's creating a new structure. So the new structure is one that will actually calling higher high, higher low. That is to say, if the market is here, the market is still between this place and this place like this. But as long as it breaks this place, breaking this last higher high, then it's giving us a confirmation that we are having a new higher high. So when it pulls back like that, then we actually get our higher high like that. So now, and the third one, like I said, the third one is a ranging market whereby it's just moving like this. So it has nowhere it is going. It's just ranging. So let us move to the next one. What are we talking about here? We are talking about the what? The types of structures. The types of structured growth goes like this. The first one is what? We have the textbook structure. We have the mechanical structure, and we have the algo structure. I want you to take a rapt attention on this, because it might look confusing. So now the first one we are doing now is what? Textbook structure. The textbook structure, I'm coming. Okay, I'm coming. So the textbook structure is what is called the normal structure. The textbook structure, that's what you will see on YouTube. That's what you will see on all those books, all those online books like that. You see them there. That is what is called textbook structure. I will draw the textbook structure for you now. Now let us see the uptrend first. This is the uptrend. Breaking this place. This is the higher high, right? This one is the higher low, right? Coming down, this is break this place again, right? Giving us the higher high, right? And higher low, right? Going like this again, breaking this place. Do you understand? So that this is that's giving us the higher high and the higher low, right? Breaking this place again, higher high, right? And the higher low. And on like that, and on like that. If it's the downtrend too, right? Breaking this low, right? I'll still tell you what all this thing means. All this thing, breaking of that place. That breaking of that place is called a name. We are getting there gradually. Do you understand? So now this one is called what? Lower high, because it is trending low. On lọ sílẹ̀. So low high la máa pè. Do you understand? Low high la máa pè. That's what you actually call it. Do you understand? So this place is what? Lower low. That's the low. Lower low. Lower high. Break. Lower high, right? Lower low. And on like that. This is what the textbook structure tells you. Do you know that if the structure is like this, everybody actually make money. Even a newborn baby actually make money. Because if it's going as simple as this, people actually make money every day. But it is not like that. Now the second structure that we have here is what? The mechanical structure. The what? Mechanical structure. The mechanical structure deals with inducements. What did I call it? Inducements, right? When something is induced, that is to say something has been taken out. What now? Like this, like someone should actually scope somebody that okay, there will be a lot of food here in the afternoon, but when that person gets there is nothing. Do you understand? There's nothing. It's just a trap. So what that person has to lose is what? His strength, right? His time. So now that is what actually happens in market. Now, when if somebody is being induced, that is to say that person has lose money. Now, this is the mechanical structure. If something is not taken out, then they will not trade. But for this textbook structure, anytime it breaks up like this, anytime it breaks that place like this, they'll be looking for. So we are still getting there. I will still expatiate more on it, but let me just talk about this now first. Now let us go to the mechanical structure. Higher high, higher low, higher high, higher low, right? Higher high. What do you notice here? You notice that this one, this place, higher high, higher low, higher high, higher low, higher high. It broke the last pullback. The last pullback is the nearest pullback, right? The last pullback is the nearest pullback. So, if it's like this, the traders trading a mechanical structure, they say, wow, they have induced some buyers. So people that want to buy here, what is their stop loss, they have been taken out. So when they are taken out like that, and it's broke, and it breaks this place, that is their own structure. So they will count this one as what? Higher low, higher high. So when it comes back there, they will actually put their order block, their Cmment, and it will buy. Right? So when it's now done like that, if it's still moving, right? If it's still moving like this, how this one, the textbook structure is still displaying this textbook structure. They are still seeing it as a movement, not structure. But when it induces the last, nearest pullback, that's the nearest higher low. Do you understand? So the nearest higher low, and it breaks up like this, then it is what? It is now counted as what? Structure. Higher low, higher high. Right? That is what they now believe, that the structure is now ready. They place their buy entry here and they place their trade. Can you see the difference now? You can see that in the textbook structure, there is nothing like inducement. There's something with. So anytime it breaks this place, the structure that the structure is ready. The structure is ready. To buy something break it by, or they believe that the structure is ready. But in a mechanical structure, it's not done like that. Something must be taken out. Something must be induced before anything could happen. Do you understand? So that's how it is there. Now the algo structure. See, the market movement is what is interesting. Now, this is the first thing. This is the first one there. So this is the part 1. So the part 2, we are going to the structure like that. Do you understand? We are going into the markets like that. So, but let us now take a look at this first, before we go into the chart. Now, in the bank, we have, people that, deposit money, that make transactions in the bank. Now, somebody made a transaction of 50 million, right? Somebody made a deposition of $200 million, right? Somebody made a transaction of $2,000. $2,000. Now, in the bank, won't they record? Okay, in the bank now, I want to ask you a question. Will they leave any transaction out when they are, recording into their, transaction books, anything that they actually use in the bank? Will they leave this $2,000 out? It will not be left out. They must record it, because everything that happened in the bank that day must be recorded. They now say because they have millions of dollars transactions, they now leave $2,000 out. No, they won't do that. That is what most online traders are doing. That is what most online traders are making. That is the mistake they are making. That is the mistake they are making, because there's a time that I actually did. I actually paid for a mentorship, because I've paid for a lot of mentorships, to be candid. $100. The first one I actually paid was about 20,000 naira. That was 2020. Yeah, 2020, like that. So, but after that, I paid $50 to one. I paid $100 to one as well. Everything are crap. They're just shit, man. So now, this is what it is. Look at this now. This transaction that happened here is the $50 million, right? This one was it $20 million I wrote? $20 million. Now come on now, take a look at this now. Take a look at this. Look at what will happen here. This is the what? 20. This is the $2,000, right? $2,000. Now, look at how big this transaction is. Look at this one too is big, but take a look at this one. Is what? Small. In algo market structure, every pullback must be counted. What are the pullbacks? These are the pullbacks. Pullback must be what? Counted. None of it should be left out. It's very, very, very compulsory for you to count every candles that you see in the market on the chart. Do you understand? If you see anyone that is actually not doing well, even if the candle is as small as Koro mustard, do you know that? Only a shidi. That little candle that is very, very small. That is why the market makers are very, very wise. they will hide the transaction inside one small candle like that. They'll hide the transaction inside one small candle, and when it is being hidden in this small candle, they will actually, most traders, they will actually don't know. They will actually look over it. They say this one is not really. So when the market now break this place now, giving us a buy transaction, that the transaction wants to go up, the textbook structured traders will be looking for sell. They'll be looking for sell. They have marked this one as lower high, lower low, right? This one won't be part of what they will mark. And this trade wants to buy because it has broken this buy here, bam, and it's bought. Those textbook traders have set their sell here. That's bought now, right? So that is why we have to be careful. So let us run a little playback on what I've said since morning. So this is the first part, though. This is the first part. So the second part will be on the chart. I will actually go to the chart and explain. Now we are talking about the textbook. This is the textbook setup. So how do you want to draw an uptrend? An uptrend looks like what? W, right? W, Shama, W, do you understand? So, and this last I, that's the break of market, and it's not break of market structure, I'm sorry. It's called market shift. The market is shifting. Okay. It's called what? Shifting. So this was the higher what? Good, thank you. This one is the what? The what? Okay, higher low, thank you. So this was your answer me now. Good. I like it as you are getting it. This was the what? Good. Higher low. Higher high, right? Higher low. So that is, people in the textbook traders actually believe that this is how the market is. But no, that's not how the market is. So now the inducement, the mechanical traders, right? They believe that the structure, when this place is induced and moves up, that is when the break of structure have happened, like the market shift have actually happened. The higher high, their own higher high is this, their higher low is this. So to come here. So they still believe that it's still moving. Bam, again, right? Again. So that being said, we have the H higher high, right? Higher low. Comes there, they enter for buy again. Do you actually understand what I'm trying to say? So, because I don't want to give much information, you have to watch and watch again. Do you understand? So for you to understand. Now this algo market structure. Let me give you a brief structure of algo market structure. To be moving like this. Wait, can you see? To be moving like this. Can you see how it is moving? Don't worry. Okay, you are seeing that this one is somehow difficult to understand. No, it is not. It is not. That is why in our towards the last topics, you actually understand how we actually go around this market structure, because we have different types of market structure. Right? Now, What are we saying here? What are we seeing here? Can you see that this place now? You can see that it was going higher, higher, low, higher, higher, low, higher, high, right? What is the inducement, right? It breaks this place, right? These textbook structures. This is the mechanical structure for mechanical traders. Yeah. So can you see this now goes back to the textbook structure, this, can you see? But in all of these, I bet you, okay, I did mean this is the H4, 4 hours, and we'll take, let me see, 1, 2, 3, let me see, this is a day 1, day 2, day 3, day 4. We actually take 4 trades here. I'm not saying I'm not saying in a day, but like 4 trades. The first day you have your trade there. Do you understand? So that's how it actually does. So you have to understand what we actually mean by market what? Structure. So thank you very much. To the next one.